everybody, it's Chris here from Serene Education with the first week of September's four majors analysis update. I'm just going to give you a quick glance into the four majors for the first week of September 2014. So let's crack on. In front of me I've got the euro against US dollar on a monthly time frame. Ideally we look at the monthly because the last month of August has just closed. So I want to have a look and see where the direction has been for the August month. And you can quite clearly see here in August we had a very bearish month indeed. So we look at the last 4 months in particular, we've seen a lot of negativity for the euro. And if I draw the major support and resistance level trend line for the long term, you'll notice that we are very much in a negative trend. And we've seen a lot of stagnation over the past, prior to the past 4 months. We saw a lot of resistance here at 13,800 and change. Clearly we saw 1, 2, 3, 4, 5, 6 months of resistance, and that comes in tune with the downtrend here on the long term. So therefore looking for the buyers to be net short for the foreseeable future. Ideally our long-term target would ideally be back towards these major support and resistance level lows here through 2010 and 2012 respectively, but also the institution moving average roughly around the 218 mark. So where price is trading right now, you can see noticeably a clear resistance level above for the foreseeable future. So therefore we should be looking to the downturn. If you look at the indicator box, primarily looking negative, and the R squared is complementing that selling sentiment. So generally should be looking for the long term to the downside. So let's move to the weekly to give us a clearer picture of that. There we go, straight away I get a sell signal on my euro indicator. And if you look at the setup, the intermediate trend has been breached, or was breached a number of weeks ago, a couple of months ago, and you can see that the weekly time frame over here all negative, and the R square complementing that negativity. RMO is below. The RSMO indicator has been below for quite some time since we had this resistance level forged out, but we have everything in favor now in terms of selling. Red arrow, red candles, all the moving average above price acting as resistance. RMO below, RSMO below. So clearly you can see the weekly, daily, 4-hour, hourly and 30-minute very much telling us we should be looking for selling opportunities. So where to? Well, our daily, there's one right now that price is testing or has been testing. We have clear resistance and support through this area here, but the big one's going to be this consolidation over here that we saw through most of 2012 in fact, and going through the end of 2012 in fact, and the latter part of 2013. But clearly between those levels you're looking in excess of 370 odd pips, but the big one's going to be that all-time low here at 1228. But for the foreseeable future we should be looking for selling sentiment for the foreseeable future. So look for any selling opportunities intraday in the direction long-term trend. And if you look at the euro against weakness, therefore you should look at any cross pairs coincide with the euro. We're seeing a lot of negativity, therefore you expect that to actually show through the cross pairs against it. So keep an eye out on the news relating to the euro this week as we go into non-farm payroll. Moving on to sterling, here again, monthly time frame, you can see quite clearly a resistance level that been forged through 2009, 2010, and recently we've start of 2014. In fact, we saw sterling rising above this major resistance level. However, over the past couple of months, price has failed to really move any further. We've had some really indecisive production figures, etc., and that really hasn't boded well, and we've seen price pulling back quite aggressively over the past couple of months. So this month closing in to the institution moving average, and hence the reason why I've drawn this support and resistance level horizontal line on the institution moving average for my monthly time frame, because that has been a major resistance level in the past. So therefore we've seen a breach and a pullback. She needs to maintain above this level in order to see any further bias to the upside. Failure to do so, we'd start seeing more selling sentiment coming through, and that would not really bode well for the foreseeable future. So dropping down to our weekly time frames, you can quite clearly see a huge drop over the past couple of months, and price is actually trading below that pink line which constitutes my institution moving average on my monthly. That's not a really good sign. We'd ideally like to be above that level. The candlesticks, however, are still painting a picture of upside positiveness. If you look at the indicator box over here, we're having a bit of all over the place. There's a lot of red on here, but also a lot of blue. However, if you look at the overall long-term sentiment on this particular pair, we have seen a lot of ups from the current lows over here that we saw back in June of 2013. If I take a fib retracement level from those lows in 2013 to the current resistance level high that we've seen this year, in fact, you'll notice that the 23.6 fib level actually mirrors that monthly institution moving average level. And you can see the 23.6 has been broken over the past 2 weeks. So if price finds resistance now, 23.6, and that level becomes a resistance level, then ideally what you're going to see is more selling negativity taking place, and that will in turn start to tell us we should be looking towards that 38.2 down here at 1622 and change, and ideally looking in excess of 290 odd pips to that level. And we would look for then further pullbacks in this market, and you can see where the 38.2 level is, coincides with the September resistance level highs and the October, November, December resistance level highs of 2012, and there again August and September of 2013. So 38.2 would be our long-term target for the foreseeable future if we fail to see price breaking this 23.6 level. Continue to find resistance at this level for this first week of September would in fact start to put more negativity or more selling pressure on price, and therefore we should be looking to the downside. Yeah, roughly around the 38.2 is our next potential target for the foreseeable future. As I mentioned to you, we have a lot of data out this week. In particular, we have non-farm payroll for the US market. Is that going to be a major hurdle for sterling? We have a number of things out tomorrow. Manufacturing PMI. Tuesday we have construction PMI results. We have on Wednesday we have Halifax HP MI results, and then we also have service PMI results. Thursday is a lot of news. We have the assets purchasing facility. We have the interest rates announcement, which is expecting no change. So there's a lot of data coming out for this week for sterling as well. Will that also bode negative? Well, for the non-farm payroll result, that remains to be seen. However, going forward, the longer price finds resistance here at 23.6 this month, that will then in turn start putting more selling pressure on price, and therefore we should be looking for further lows. Moving on to the US dollar Swiss franc, however, if you look at this particular pair, weekly looking very much negative indeed on the actual indicator box. If I go to my monthly or my chart for the US dollar Swiss franc, you can quite clearly see how there's a total opposite. So we have a correlation here between these two particular pairs. Saying that though, on the monthly you can see there's a bit of negativity on here, and you'll notice that the overall candlestick color is still very much to the downside. We have seen a number of months of support, or price moving higher on the monthly, and that, if you look at it overall, you can still see that the major long-term support and resistance levels, this one right here, roughly around about the 98.72 and change, slightly higher or lower, but you can quite clearly see since 2008, 2009, 10, latter part of 2010, further 2012, we've seen both support as well as a resistance level. Price is still trading below that level. You can still see that price has still been making swing lows. We haven't seen any new swing highs. And if you look at the consolidation now, going through to our weekly time frame, there we go, we get a bar signal on our weekly, and that's primarily because we have a blue arrow, blue candlestick, the RMO is above, and the OSMO has clearly been above for a number of months, in fact. And you can see the institution moving average is in play right now. So it's an important one because you can quite clearly see each time price actually attempted the institution moving average in the past. Clearly we had a failure here back in May of 2012. However, we did see a genuine breakout pullback in April of 2013 and failure. And then we saw a reattempt in June. That failed again because we had this tweezer top, railway tracks, and we saw price revert to the downside again. So this month, you'll see we closed higher. It's important that we see price maintaining above the institution moving average now on a weekly. And you can see it happens to be a price upon resistance level at the same level. So going forward, like a euro, I said, if we still see euro finding resistance at the underside, we should be looking for further shorting opportunities. Here again, it's the total opposite. If we see price finding support or maintaining above the support level here, then we should be looking for bias to the upside. So it's imperative this new month, the start of this new month, let's have a look and see if the US data that comes out this week is in favor of US dollar strength. And if that's the case, then we should see further upside for the US dollar Swiss franc. Failure to see any further, any really positive non-farm payroll figures would there again constitute for further resistance or consolidation for the start of September, and that could obviously stem further consolidation with a turn for and change in market sentiment to the downside. So this first week of September is very, very, very important for price, especially because we have a lot of data out for the US dollar, and that's going to be reflective on where price is trading right now. So it's imperative that we see the US dollar get some fantastic news out to see any further upside. If not, then we could see a return to bearishness for the month of September. Looking at the US dollar Japanese yen to finish off my analysis, you'll notice that on the monthly time frame, price has been trading still above the major support and resistance level, which is the December 99 support, the 2003 support, 2006 support level, but then we saw resistance further on. However, since then we've seen a major support move higher, a bounce, and we've seen a correction. However, saying that, the US dollar Japanese yen has not really moved a hell of a lot through the start of the first 7 months of this year. If I drop down to a weekly time frame, you can quite clearly see that price has been quite consolidative. However, going into the end of August, we saw a nice bullish engulfing candle, especially after the last week. In fact, we saw a nice bull move to the upside, which broke this major support and resistance level highs here, roughly around the 102.95. So the bias still looks upside. The candlesticks are still pointing up. So we should be looking for further buying opportunities. The first or the major port of call would be this area at 105.38 and change. That has been the major high for price recently, and where price is trading right now to the level, we're still 130 odd pips away from that particular target. So looking into this new month, we'll be looking to see price actually building on the last week's close and looking for further highs. There again, as I mentioned on the US dollar Swiss franc, we want to be seeing a lot of positiveness or strength on the US dollar this week to coincide with that. Any negative US dollar news would have a detrimental effect on the US dollar Japanese yen, and we could see a return to negativity on the buyer side. So very, very important that we see non-farm payroll figures come out for one to the upside. And if I look at the Friday figures, they're expecting non-farm employment change of a positiveness, growth from 2009 to 209,000 to 222,000. If it comes out higher than 209,000, then we should be looking for the upside. The unemployment change has also dipped by 0.1%, and if those figures do come up as mentioned here on the forecasts, that would have a very, very positive figure for the US dollar going forward. So for this month, we're looking for US dollar strength to maintain against the yen for the foreseeable future. So look to see any buying opportunities for that particular pair going forward. That's it, guys, short and sweet. But yeah, first week of a new month, so be very, very aware that we have a lot of data out this week, especially Wednesday, Thursday, and Friday for most of the majors. So keep that in hand. And if you are trading, please adhere to money management rules, strict money management rules, because we're going to see a lot of volatility or a lot of speculative volatility as we go into a lot of data crunching. So keep that in hand. Otherwise, I hope you have a fantastic week, and I'll catch you guys in and around the chat site. Until then, you guys trade serenely.